Well, foreign direct investment into Nigeria in the second quarter of 2024 dropped to $29.83 million, marking the lowest level ever recorded based on available data up to 2013. An analysis of data from the latest capital importation report by the National Bureau of Statistics shows that the FDI dropped by 65.33% compared to $86.03 million recorded in the same period last year. Economists blame the significant drop in FDI on Naira devaluation and unstable foreign exchange market, as the Naira lost about 40% of its value in the first 6 months of 2024.
Right, let's bring in Professor Ken Ife, who is a development economist and the president of the Institute of Professional Economists and Policy Managers. Thank you so much for joining us on Newsnight. Well, there you have it. We're being told that the devaluation of the Naira is a fundamental factor in this, low performance in capital inflows into Nigeria. Expatiate on that, and what are the other issues surrounding this?
It's not by any means the only contributory factor. It's just a contributory factor. Right. The devaluation and they're contributory factors. There are many other things. You see, FDI is just one of those macroeconomic parameters that tells only one side of the story. It doesn't tell about domestic investment. You wouldn't capture 20 billion Dangote put in refinery. You wouldn't capture Ohando's multi-billion takeover. You won't capture all those. And obviously, when some foreign companies that are based in Nigeria begin to walk away, they are part of the people that attract that investment to expand, to take over, to consolidate their supply chain. So inevitably, their exit would affect foreign direct investment, because by definition, foreign direct investment are investments, cross-border investment from foreign entities coming into the country and then making significant investment, and is a long-term patient capital that takes a longer-term view of the economy. Is the direct opposite of portfolio investment. Portfolio just comes for a short run. They're targeting the high interest rate, the special stability on foreign. They come in 3 months, they can go 6 months, they can go. If things are fairly okay, they can extend. So there are totally different kinds of investment. And those ones showed huge increases. Yeah. That, if you look at the money market, it's about 8,159% increase. And then 108 increase on the bonds and the equity, 1,659. So they are having a field day, because of what they are. But if you cough, they'll vanish.
But again, if you look
and then when they want to go, you're going to find them the dollar back.
Yeah, absolutely.
And that's where, if you don't, you will be murdered by the rating agencies.
We saw what we went through in the aviation industry, and when this administration came, talking about airlines who were unable to repatriate some of their funds.
That's right.
So it comes to some of the key things you just highlighted, that some of them were leaving. But is the government doing anything that may reverse the trend? Because this seemed like...
What government is doing is, first of all, we have liquidity crisis, forex liquidity crisis. So the first thing is to steady that. And then you have to create the condition to attract more foreign portfolio investment. And one of those conditions is when you begin to remove the arbitrage, and first of all, remove the spread between the two rates, which they have achieved. So you have removed the arbitrage, even though you still have substantial dollarization of our economy, but there's no longer incentive for them that arbitrage opportunity for them to trade and make money. So we have settled at about $1,600 and something Naira to a dollar. But over time, with continuous flow, then it begins to come down. For example, when Dangote sorts out our import-export of crude, and then you remove over 15 to 20, 40% of our hemorrhage on our forex. Yeah. And then there are other things like diaspora remittance is increasing. There are other issues that will increase the supply of forex. And that will now begin to push down that 1,600 rates down to about 1,000. And as it does, that GDP values increase. When the foreign direct portfolio comes in, is actually watching that, because if that stays steady, they will allow their money to hang on for some time. But if they start flipping and then you have differential, they will take their money out and then will plunge us into crisis.
Right. So now, October 1 presidential speech, the president, stated that Nigeria had attracted about $30 billion in the last 1 year.
$50 billion.
Or 50, I mean, different figures being bandied here and there. We heard the oil minister, say that about 50 billion is coming into the oil sector. Now, isn't that there's a difference between attracting and actually securing the
and then
these
also
funds,
reflecting it on this parameter you are looking at,
right?
Capital importation. I have no basis to doubt the president. It could be if Nigeria's investment environment is actually improving. If you look at, because we've got we now have a handle on the monetary policy, and then we're actually having a stronger handle on the fiscal policy. Wait for them to approve, the assembly to approve this new fiscal reform. It's beautiful reform. I've gone through that. I've debated it in television. That is good if we implement those, because what they do, they complement monetary policy to actually stabilize the economy. And the investors are looking at those. So I have no doubt that 50 materialized, but it hasn't shown yet.
So why are you afraid about, because
it will take time to show here on this data that you have.
Because you are afraid of the if now, which is a conditionality clause now. What makes you get to that, little bit of, your discomfort in situation whereby you say, okay, if we implement this, so you fear that the...
No, we've always known that the best plans can be written by Nigerians. We've got so many good plans, but the devil is in the implementation. But the major part of that implementation is actually political will. Because once the political will is okay, look at how the president dealt with the shenanigan in the oil industry. Just said, enough. Say the crude in Naira, buy the prices. Simple. That is political will. We've been going. Look at PIB. President Buhari had enough and signed it. That's political will. So you do have all that. When at a point, the minister says, enough. I've had all the arguments. Enough. That is my decision. And then we'll move on. But we have so many good plans. I have gone through that fiscal plan. And the two things, for example, we know that the population is suffering. We are paying huge inflation tax because of the 33 trillion that was printed that couldn't connect to increase in productivity, that couldn't connect to huge investment coming in from abroad. We printed that. So we are suffering that. Now, there are many things that the president has done.
Even the government says that has been...
yeah, but the thing is still there in liquidity. Some of it is still there in excess liquidity, but it's being mopped up with fury by monetary policy authorities. But the fact of the matter is that while that is going on, you have to recognize that Central Bank says we've done the much that we can. There's a very little thing. For example, there is what we call cross-border demand pull inflation. 100 million Francophone countries and citizens surrounding Nigeria are buying our food. And because of the inflation, because of the differential in the value of the Naira, the Naira is about 80% devalued compared to the franc CFA. Because 10 years ago, I'm from ECOWAS Commission. 10 years ago, we were buying $1, we'll buy 1 Naira, we'll buy 3 franc CFA. Now, we can't buy 1, we'll buy only 0.7, 0.8. So it's devaluation. So because of that, they are buying our food. It's very cheap. Even if we double the price of our food,
so they have the financial muscle to buy up.
It's not financial muscle; it's the currency differential. So they will buy it so cheap, 80%. They can process it and they export it.
Is
so
the devaluation of our naira, is the devaluation of our currency at the bottom, at the core of what Nigeria's economy is facing? Is that what it is? Because the devaluation of the naira was supposed to attract.
No, that if
FDI
we are exporting
and all
goods.
Of that. Okay.
If we are exporting goods, like
finished goods, not primary goods.
No. Primary goods is not, you don't have any control over the price of primary goods. They control it. So that's why they turn you back and then they tell you that it's all rotten and then other stuff. We don't have control. But if it is processed and you have market for it, devaluation doubles, triples your order book, gives you a lot more dollars that you need, but that is the problem we have. The only thing that we have is crude and gas. Crude gives us 79% of the forex, 11% from gas, but you have no control over that. Production, you don't have control. Price, you don't have control. So that is where it is a big challenge for us.
And we'll continue to have portfolio investors coming in and not necessarily the real foreign direct investment.
No,
That
foreign
really
direct investment is a
helps,
different
because,
story.
I mean, the figures we're seeing here, the banking sector, you know, got a huge chunk of this capital.
Don't forget that
inflows.
they're capitalizing now.
Right.
So if this is the best time for them to get as much money as possible, because they're capitalizing. All of them are out in the market. So that is why almost half of the money that came from banking and finance. Then, of course, there's something on production and a bit more on trading and all that stuff. Yeah. And then there's also something about the trajectory. If you notice that Citibank has 1/3 of that, and then the 3 South African banks plus Citibank have 90% of that money coming through. And if you look at the origination, half of it is coming from UK.
What does that say?
Then you have Netherlands and South Africa. South Africa is on the thing. So South Africa is a very important in all this equation for them to have about 23%. So you got that. Then of course there is also the issue of the destination of the money. Half Abuja, half Lagos. So you know it gives us some food for thought.
Well, thank you for your insights on this. As always, Professor Kenny Ife, would like to see you again.
Thank you.